Hey guys, what's up? Alec back with the daily stock market, and look at that. We have a green day in the stock market, nice and green. Spotify up 12%. However, a stock that's not green today is Snapchat, which is now down 14% after hours. And at one point, it was down 15% after hours, and there's still a good chance that it can continue going down. So in this video, we'll briefly be diving into Snapchat, see what's going on with the earnings. We also had AMD report earnings today, and they are up after the earnings on a double beat. Okay, Wednesday, after the close, we have some big names reporting. Meta, Facebook. Okay, can we trade Meta based off what Snapchat has released in their earnings? Thursday, after the close, we have Amazon, one of the biggest companies in the world. But not only do we have Amazon, we also have Apple and Google and Qualcomm and Ford, some of the biggest companies in the world, all reporting earnings on Thursday after the close. So we'll talk about some of those stocks also in this video. Make sure you stay all the way to the end so you don't miss any Amazon, Apple, or Google updates for earnings. Share this video with a friend, and let's dive right into it. Okay, so Snapchat, let's go over just the important stuff. Down 14% on earnings. EPS came in at a beat. Okay, 3 cents above what was estimated. Revenue came in at a little bit of a miss. Very slight miss. Okay, Q4 daily active users was also a very slight miss by 300,000. So not much at all, yet we see Snapchat down 14%. So I think tomorrow before the pre-market will tell us a lot more what we need to know with the Snapchat earnings once the call comes out, and that'll give us a better gauge if we want to take a put option or a call option out on Meta. And if you're interested in taking a put or a call option out on Meta, then you definitely want to dive into Snapchat's earnings statement, specifically on their ad revenue and their income off of their ad revenue, to see if that's growing or shrinking. Let's talk a little bit about Amazon at $102 per share. In the past week, up 10%, and in the past month, they're up 20%. So their shares are off to a roaring start, to say the least. So there's definitely some room for Amazon stock to run up a little bit higher to around $125 per share. They've just recently started bouncing from December lows and January lows, okay, of $85 per share. Now it's sitting at $102 per share. Heading into earnings tomorrow, 5-star analyst Brian White expects Amazon to deliver revenues of a beat of $147 billion, above Wall Street's estimate of $145 billion, while his EPS projections of 17 cents matches consensus expectations. So they could come in on target on EPS, or it could be slightly above if their revenue is higher than what's expected. For the record, Amazon is calling for sales between 140 and 148 billion and operating income in the $4 billion range. White's top line forecast factors a 7% year-over-year growth, which amounts to a sharp deceleration from the 15% uptick seen in Q3 2022, and is also lower than the 9% growth exhibited during the same period last year. Additionally, his Q4 2022 revenue forecast takes into account about 16% sequential uptick, well below previous December quarters, 4-year averages of up 27%. For the 7th quarter in a row, AWS should remain Amazon's fastest growing segment. However, while White sees revenues here climbing by 24% year over year to $22 billion, that reflects a deceleration from the 27% growth notched in Q3 2022, and is also some distance short of the 40% uptick posted in the same period a year ago. So you definitely have to be careful when taking a call out on Amazon if you think they're going to beat. Yes, there's a lot of bullish things also, like considering that the quarter was for, Black Friday, and also all that Christmas shopping that was going on. Think about how many people were using Amazon for those two things. Okay, as the Q1 2023 outlook, White is calling for the seasonally weakest quarter of the year to generate sales of $123 billion, a 6% year over year increase. Looking at the bigger picture, White has an apprehensive take on what's around the corner. We believe that Amazon is well positioned as a key beneficiary of the digital transformation. However, regulatory headwinds persist, and we believe the darkest days of this downturn are ahead of us, the analysts explain. Okay, so obviously this analyst is definitely bullish on the take. Overall, we can see that that does not mean that the stock is about to suffer, according to the analyst. Along with his buy rating, his $136 price target suggests the share will climb around 35% higher over the next 12 months. The Wall Street largely seems to echo White's positive stance, considering TipRanks analysts showcase Amazon as a strong buy, and out of 37 analysts polled by TipRanks in the last 3 months, 30 of them are bullish, while 4 just remain on the sidelines. Okay, at $132 per share, the average target makes room for 1 year returns of around 32%, according to analysts. So if you are looking for a good long-term hold, Amazon could be on the list, especially if it continues to sell off or it dips down this earnings season. It could be a buy the dip scenario for Amazon. Okay, so now let's look at Google at $98 per share, up only 9% in the past 1 month, and they're still down 26% in the last year. They had highs of $148, $150 per share. They're still down 33% from highs, and they have a 52-week low of around $82, $85 per share. So as we scroll down, we'll continue to see that the P ratio is 19, implying it is a great deal right now for a big tech stock. For example, Amazon's P ratio is closer to 80. Now here's an interesting statistic. Google is actually in 6th place position on our list of 30 most popular stocks among hedge funds. As per our database, 156 hedge fund portfolios held Google Alphabet at the end of the third quarter. Now we'll also see an analyst article that they wrote saying, I have neutral views on Google's coming Q4 results. Okay, that's an important thing to note. Neutral stance on the Q4 results. Google shares are trading at lower multiples in comparison with the shares of peers of other companies, big tech companies. There is also an upside to historical multiple valuation. Despite my neutral view on Google's Q4 results, I think it's worth accumulating the company's shares for a long-term holding period. Okay, so although, they might not have the best earnings report, I think the analyst is saying that there's a good idea to just be buying dollar cost averaging in for long term on these Google shares. Problems in the global economy put pressures on the performance of many companies. Google is no exception. The company's business performance is under pressure from the weakness of the world's advertising market as well as the strengthening of the US dollar index. As part of the analysis of the Q3 2022 results, I noted the undervaluation of Google shares. Then I noted Google's shares falling following the publication gave a good chance to start forming a position in the company's shares. Google shares are now up 7% since posting. And you guys know on the close friends list at least, and even if you've been following my YouTube channel, that Google's one of my favorite stocks to be loading up for long term right now, especially at $80 per share and $90 per share. So we don't have to read through this whole article for this analyst to tell us that Google is one of the best stocks in the stock market right now. Just understand that. And as long as Google's under $100 per share, I'm going to be dollar cost averaging in, and I'm going to be accumulating as many shares as possible. When Google's under $90 per share, that's when I'll be buying heavier. And when Google's under $80 per share, that's when I'm going to be loading the boat for long-term specific holding on Google. So as far as their earnings are concerned, they probably won't move much on earnings, maybe 3% or so up or down. So it's not a big deal on their earnings. But I do hope they move down to around 87 or even under $90, $95 per share so I can start loading up more shares in my long-term accounts. They are one of my favorite stocks. I want to continue to buy it. while the PE ratio is nice and low, while the market cap is under 1.5 trillion, because I believe that Google will continue to be one of the most valuable companies in the world, especially as the AI grows and artificial intelligence and chat GPU, GPT, and all those different things keep growing. Google's only going to benefit from that. They have some of the best artificial intelligence in the world. The significant cash generated from the Google search business allows Google to remain focused on innovation and long-term growth opportunities that new areas present. So they'll easily be able to take down ChatGPT, in my personal opinion. Android's dominant global market shares of smartphones leave Google well positioned to continue generating top-line growth as search traffic shifts from desktop to mobile. So a lot of people forgot that Google owns Android, and they also own YouTube along with many other segments of their business. As the number of online users and usage increase, so will digital ad spend, of which Google will remain one of the most beneficiaries. So they have a huge compatible, durable advantage in the market, in the ad spend market. That's why I love Google, and that's why they are one of my favorite stocks in the stock market to buy at the current price. So I hope you guys enjoyed that quick update video. Go ahead and check out success number 7 on the highlight section of my Instagram if you want to join my close friends list. I actually shut signups now, and I have the wait list going. So if you want to be first to get on the close friends list, go ahead and hop on that waitlist. Message me here on Instagram. Tons and tons of success has been happening on the close friends list, and it's not stopping anytime soon. Earnings week is one of the best weeks to get started on the close friends list because there's so much positive success and so many stocks moving up and down and articles to read that we can take advantage of also. We can see just started my small account and already up $1,000. Okay. We also can see another student up 139%, $300. Another student, thank you so much, got a 46% return. You can see their account was up 15% total in just one day. So message me here if you want to take advantage of that and make 2023 your year of stock market success. And I would love for you to be one of my next success stories. So thank you guys for the love and support that you've been showing on Instagram and on YouTube. Drop a big thumbs up on this video. Share with a friend if you think that they will find value in it. And as long as you guys keep liking these videos, I'll keep making them for you. I'll see you in the next video. Remember, don't time the market, buy the market. Peace.